This is Talk 650.
This is Talk 650.
Powered by CBS Radio.
In the studio with us is John Bott from TriStar Financial. He's our bond guy. And it's always fun to have John in here. Our phone line is open for your calls, too, at 713-9-650-650. John, Representative Ron Paul is now going to introduce legislation to force an audit of U.S. holdings in gold at Fort Knox. He wants them to open the vault and count the bars.
You know, the only thing that seems anybody's concerned about, of course, that's gold.
Yeah.
But I call it gosh, because you got gold, you got oil, you got stocks, and you got homes.
Uh-huh.
Gosh. Everybody, that's the only thing anybody cares about right now.
Yeah.
But he's conducting an audit. Apparently there was most of the gold was under the World Trade Center, and most of the gold now is in New York. I don't blame him for wanting to do an audit of the Fort Knox, but, let's do an audit of the Fed Reserve. Bloomberg filed suit against the Fed Reserve to try to find out what was going on, what all they were into with the stimulus money.
Yeah.
Fed Reserve has fought it every step of the way. Now, 2 court cases have been won by Bloomberg. They've all gotten all the way to the federal courts, and they won that. Now they're asking for a panel of federal judges, in other words, another delay tactic, to hold this thing up even more. Obviously, the Federal Reserve is going to take it to the Supreme Court. What Bloomberg is wanting to know is who got the money and what's it being used for.
That's a logical question.
Which, if there is any money going out to the stock market in the indexes, is going to be discovered under that particular scenario. I think it's important that we know. Here's the problem. I mean, everybody said, well, they're just supporting the stock market. Why? What's wrong with that? That's good, because we don't want an economy that's melting down. Well, first of all, I'm not sure, without the mark-to-market in place, since they took that out, that you even need to support the stock market. The worst thing about it is if they keep buying every time the stock market goes down, and the news gets worse and worse, and they keep buying. Let's say the economy turns around in 2 or 3 years. What's the Federal Reserve going to have to do from that 2 or 3 years on? Every time there's a rally, they're going to be selling it. So in a great market, when you should be making money hand over fist, you end up making nothing because the Fed influence of selling into it causes it not to go up.
And because the Fed has been artificially influencing the market behavior, when it does turn around, in order to pull back that artificial support, it's going to continue to impact what's going on. In other words, it's manipulated frontwards and backwards.
Well, at least that's my personal opinion on the thing. I mean, you look at the volumes in the market. You've got all these flash traders to trade millions and millions of shares a day, and yet the volume keeps dropping and dropping and dropping because people don't feel like it's a fair level playing field.
Well, there's been a lot of people who have eschewed the stock market and gone over to the fixed income position, the bond side, in which you live and play.
And of course, they think that there's a bubble going on in the fixed income market, but really the bubble, whether there's a bubble or not, depends on what happens with the economy. It's not, it's easy to have a bubble in stock because you don't have any real parameters to work with. Okay, the real returns in the bond market, if you've got a deflation rate of 1% and you've got a real return and you've got a 2.5% coupon, you've got a 3.5% real return on your money. When you've got a real return on your money, it's not overvalued. It's when you have to depend on speculative returns.
Right.
Returns that aren't there. Like, I went out and bought this house and all I put was $80,000 down and my negative cash flow, is $500 a month, because my payment is, $1,000 a month and my, rent is $500 a month. So they got a negative cash flow of $500. Well, what you're doing when you're saying that is you're saying, I'm speculating the price of the house is going up. As long as there's real returns in the bond market, you can't really say it's a bubble. Okay, and that's what everybody's trying to say, including Bill Gross. As long as the returns are real. Okay, and they still are real, even at a 260 long bond 10-year. You're looking at an inflation rate of less than 1%. If you look at the 4 inflation indexes, you got the PPI, Producer Price Index, which the manufacturers look at. You got the CPI, Consumer Price Index, is what the individuals look at, and then you got the Import-Export Index, which is what the global multinationals look at, and then you got the PCE, the PCE. I can't remember what it means. Personal consumption expenditures.
Thank you for that. Yeah.
Which, of course, is what the Federal Reserve uses to judge the inflation in the economy. That's the overall number that's most used, and all of them are pointing toward less than 1% in actual inflation, which means that a 10-year at 2.5% is still giving you 1.5 spread, low by historical standards, but certainly not out of line or in the bubble territory.
Yeah.